Why is Canada's real estate so screwed? People have been humming and hawing about this for many years, probably even decades. And I'm going to give my opinion on this today. Again, I'm not an economist. This is literally just an opinion. Maybe you will align with it. Maybe some things I say won't be 100% accurate, but there's going to be some truth in what I'm saying. And maybe you disagree with it. But to me, I rarely ever see anybody talk about the actual root problem. They talk about all the symptoms of the problem. They talk about the symptoms of the illness, and then they'll talk about how we can treat the symptoms. But the overall illness in real estate, I don't think is solvable. And I'm going to give you my opinion today on what the actual illness is. So obviously real estate is very expensive, and it's very hard for many people to afford their first home. It's hard to save for the down payment. It's even hard to have the income to qualify for like a 2-bedroom condo in the suburbs now in Langley, right? They're like $600,000, $580,000. You need to make like over $100,000 to buy a 2-bedroom condo now, which is crazy. And if we look at this chart, you can see that this problem started to get out of hand right after the year 2000. And from what I've heard, like for a long time, people were saying, supply is the issue. And I was on that boat too, that supply is the issue. But I knew there was a deeper problem. But I thought, if we just fix the supply issue, maybe we can get back to some normalcy. And, it's funny, everyone's complaining about supply. Just get government out of the way, let them build, blah, blah, blah. That'll fix everything. And then they kind of did that with this like blanket rezoning thing. And now everybody's pissed about the blanket rezoning. Everyone's like, completely choked about the blanket rezoning. Now they're building homes that are too big for the neighborhood. It looks like crap. So I don't know if supply is going to fix, I don't think supply is going to fix the issue. What I think the issue is if you look at interest rates around 2000, okay, this is where things started getting out of hand. The overnight lending rate was 5.75%. And if you look at the 1980s based CPI, because I believe they changed the way they calculate the CPI twice, once in 1980 and then again in 1990. And if you look at the 1980s based CPI, how we would have calculated it then, you can see that, from the 90s, from 1990 to 2000, the average rate of inflation, like it was 7% here, and it ended the decade around 10%. On the 1980s CPI, not the CPI we use today, which says it's somewhere around 3%, but on the 1980s CPI, the average to me looks like it probably would have been about maybe 6% for the decade, maybe 6.5%. And during that decade, our overnight lending rate, it started the decade at 13.9% and it ended the decade at 6%. So again, the average of this entire decade, the overnight lending rate was probably like 8%, 7%, maybe somewhere in there if you're to take an average, meaning that the interest rates we would have had at that time with inflation on an average of 6% and the overnight lending rate 6% or higher, between like 6 and 8%, you would have had neutral rates at the worst, or you would have been like positive 2%. Our interest rates would have been 2% higher than the rate of inflation. But what happens after the year 2000 is this. For the next 25 years, the average interest rate is probably like 2.5% over the 25 years. I would say the average is 2.5%, maybe 3% at best. Well, what was the inflation rate from 2000 till now? Well, the average inflation rate from 2000 until now looks like it was above 10%. It looks like it would have been 11% if we're calculating it based on the 1980 CPI. Meaning we would have been negative like 7+% real interest rates. And in my opinion, what this did is it allowed people to basically get paid to take out debt, and therefore people would take out a lot more debt, and inflation is expansion of the monetary supply. And the way we expand the monetary supply is with debt. Whenever you take out debt, you're literally minting new dollars into the monetary supply. And what ended up happening is because we're Canada and nobody's really taking out loans to start businesses and invest in businesses. People are taking out loans to buy real estate. So all of that new money, because of the low interest rates, made its way into real estate and pushed up asset prices. Well, the wages were basically going up like 2 or 3% per year. And that's what caused this. What caused this was low interest rates, artificially low interest rate, real negative interest rates is what has caused Canadian real estate to get so screwed up. Now, what people will say is they'll be like, okay, this is how we're going to fix the problem. All right. We're going to bring out all this supply. We're going to change these policies. We're going to do that. I don't know how that's going to fix this. I don't think this is a fixable problem. So the next thing they'll say, not with policy anyways, the next thing they'll say is, or at least not immediately with policy. I mean, if you do everything right and home prices trade flat for the next 15 years, maybe you'll fix it. But the next thing they'll say is we need a crash. We need home prices to go down from this 400 mark down to basically 175. We need a 75% reduction in home prices for Canadian real estate to be healthy. And I don't know if that is healthy. I think a correction is healthy. I don't know if an all-out housing apocalypse would be healthy for Canada, right? Like, hear me out on this metaphor, okay? Let's just say you have some type of problem with your heart. And the doctor's like, listen, if you don't do this surgery, you're going to live for 15 years. However, if you do the surgery, we can maybe get you another 40 years in life. The problem with the surgery is that it's a 10% survival rate, right? That's basically a housing crash of 50%. There's a 10% chance this is going to make things better. But if it doesn't make things better, things could get substantially worse because of a housing crash, like job losses, riots, crime, depression, things could get out of hand very quickly if the housing market were to crash that much. And I don't know if that's the case. I'm just thinking out loud, right? Is that really going to be the best thing for Canada? A 50% decline in housing prices or 75% decline in housing prices? Is that actually going to make things better? Or is that going to be a be careful what you wish for kind of scenario? I think a lot of people would probably choose to be alive for 15 years and not risk those 15 years for a 10% chance of making things better. I think the healthiest thing, like I said, would probably just be home prices from here on out trade flat to very slightly down for a very long time, and we somehow manage to get incomes to rise in relation to the price of the homes. But again, is that even possible? Probably. Are we going to do that? Probably not. So my opinion on what happened with the home prices, or what the real problem is in Canada, is low interest rates for a very long time that caused extreme asset inflation. And I don't think supply is going to fix that. I don't think government policy is going to fix that. I don't know what's going to fix that. I don't know how that's fixable without a very long time of assets just kind of trading flat. And I don't even know how you're going to do that because the economy is like garbage right now. And at some point, they're probably going to start doing stimulus and increasing the monetary supply again. You know, when the home prices crashed in 2008, people would say that that was healthy and the states needed that. But I would argue, was that really healthy? Because the response to that crash is exactly how we ended up where we are now, with QE, money printing, stimulus, bailouts, and then that got everything so inflated and so synthetically screwed up that every crash or every downturn that happens after 2008 has to be met with even more stimulus, even more QE, even more bailouts. Like already what was the response to 2020? We did the same thing, just way worse than 2008. So was a housing crash in 2008 really healthy for the US? Probably not, because the response that they needed to have to that housing crash made things very unhealthy in the future. So again, these are just some opinions off the top of my head. I could be completely wrong. I'm not an economist. Maybe you agree with those opinions. Maybe you don't. Maybe you have a much better idea of what the actual problem is. To me, I think the actual problem is just inflation over a very long period of time that has caused assets to completely detach from incomes. That would be my guess. And if you enjoyed this video, like, subscribe. If you want to chat with me about buying or selling, link down in the description. Otherwise, I'm that Agent Kelly. I'm making moves to move you. Peace.